Welcome back, everybody. Ready to dive into some more of the most interesting financial news out there.
Always ready to see what's shaking things up.
We'll be looking at some recent Forbes articles, and let me tell you, they are packed with stuff that just makes you go, huh, I didn't see that coming.
Well, that's the fun of it, isn't it? The market's always got a few surprises up its sleeve.
Exactly. I mean, who would have thought Bitcoin would be getting a boost for the election?
Yeah, that one raised a few eyebrows for sure. It seems like investors are starting to view Bitcoin as a safe haven asset, you know, like gold, especially with all this talk about inflation and uncertainty around the election.
So are they saying Bitcoin's going to be like the new gold, like people are going to be stashing it under their mattresses?
Maybe not under mattresses, but it's definitely becoming more mainstream. Big names like Paul Tudor Jones are even investing in it. And with both candidates talking about policies that could increase the national debt, there's a real fear of inflation.
And Bitcoin, with its limited supply, is seen as a hedge against that.
Right.
Yeah. So it's like a digital gold rush,
Right.
but instead of digging for nuggets, they're mining for Bitcoins.
Exactly. And then you've got the recent approval of spot Bitcoin ETFs. That's adding fuel to the fire, too.
Ah, the ETFs. Now, that's something I'm still trying to wrap my head around. I read about it, but honestly,
It can be a bit confusing. It's basically a way to invest in Bitcoin without actually owning the cryptocurrency directly. Think of it like buying stock in a company that only holds Bitcoin.
oh, okay. So it's like a simplified way for traditional investors to get into Bitcoin without having to deal with all the technical stuff.
Exactly. It opens up Bitcoin to a whole new group of investors, which explains why it's doing so well.
So it's kind of like Bitcoin is finally graduating from its rebellious teenage phase and settling down into a respectable career.
Haha, something like that. But hey, speaking of big tech companies making moves, did you see the news about Alphabet?
Google's parent company.
Huh.
Yeah, they just announced record earnings for Q3, but their stock's actually underperforming compared to the S&P 500. What gives?
Seems like investors are a bit hesitant. And there are a couple of reasons for that. The antitrust probes are still looming over them. That always creates some uncertainty. And then there's the whole AI spending spree that Google's been on.
Right, those probes have been going on forever, but they're still making tons of money.
True. But all that AI research and development costs a lot, and it's impacting their profits in the short term.
I guess it's like they're playing the long game. They're willing to sacrifice some immediate profit to dominate the AI landscape in the future.
Exactly. And that's a key takeaway here. Google's prioritizing its long-term vision over short-term gains. It's a risky strategy, but it could pay off big time if AI truly becomes as transformative as they think it will be.
Makes you wonder what this means for the rest of the tech industry.
Hmm.
Are we going to see an AI arms race where only the companies with the deepest pockets will survive?
Now, that's a good question. One that we'll definitely be keeping an eye on. The competition is heating up, and it's going to be interesting to see how it all plays out.
Okay, now for a story that I found really intriguing, have you heard of 3G Capital?
Oh, yeah. 3G Capital. They're a fascinating bunch. Not your typical private equity firm at all.
Right. It's like they operate in their own little universe. They made a killing off Burger King, like a $20 billion profit. And they're not like these other firms that are constantly buying and selling companies.
Yeah.
They make these long-term investments. And get this, they mostly use their own money and funds from a few wealthy families.
Including Warren Buffett. Yeah, it's a very concentrated and patient approach, almost the opposite of what you see with most private equity firms. They're not afraid to go against the grain.
And they're not afraid to invest in industries that others might overlook, like their recent acquisition of Hunter Douglas.
Window coverings, that's not exactly the sexiest industry out there.
I know, right? But they're already seeing huge returns on that investment. It's like they have this Midas touch.
Well, they certainly have a knack for finding value where others don't. And in this market, with all its volatility, their steady long-term approach might start to look even more appealing to investors.
It's like they're the tortoises in a world full of hares. Slow and steady wins the race. But hey, speaking of companies defying expectations, we got to talk about AMD.
The semiconductor company. Right. They crushed their earnings expectations this quarter, but their stock dipped after hours. How does that even happen?
Yeah, it's a head scratcher. But apparently, while their performance was strong, it wasn't quite as strong as analysts were expecting. And in this market where everyone's obsessed with massive AI growth, even a slight miss can spook investors.
So maybe the AI hype is starting to cool down a bit.
That's the million-dollar question, right?
Right.
I mean, the demand for AI solutions is still there, but maybe the market's getting a little more realistic about the pace of growth.
It's definitely something to watch. But hey, we've covered a lot of ground already. We've talked about Bitcoin's election boost, Google's AI ambitions, and 3G Capital's unconventional success. But I think there's a bigger picture emerging here.
Yeah, we're not just talking about numbers on a spreadsheet. We're talking about the forces that are shaping the market, from elections to the AI boom, and
Oh,
how different investment strategies are playing out in this dynamic landscape.
it's all connected. And it's fascinating to see how these seemingly unrelated events can actually influence each other.
Absolutely. So before we move on to some more fascinating stories, let me ask you this. Given everything we've discussed so far, what industries or companies would you be most interested in investing in right now?
Ooh, that's a tough one. But I'd say, well, if I had to pick a sector right now, I think I'd be looking closely at companies that are really well positioned to benefit from the whole AI boom. But it's not just about the tech itself. It's about understanding how AI is going to be integrated into different industries
Okay.
and finding the companies that are leading the way in that integration.
So not just chip makers like AMD, but also companies that are actually using AI to improve their products or services, make their operations more efficient, or even create tooling business models.
Exactly. And I'd also be looking for companies that are showing they're committed to developing AI responsibly and ethically. It can't just be about making a profit. We have to consider the bigger picture, the
Mhm.
impact this tech is going to have on society as a whole.
Absolutely. Ethics in AI. That's a whole other conversation we could have. But speaking of responsible investing, I was really impressed by 3G Capital's approach. They're not just chasing quick wins, they're playing the long game. And they really seem to prioritize operational excellence over fancy financial maneuvers.
It's a refreshing change of pace, isn't it? Compared to all those aggressive short-term focused strategies you see so often in private equity, 3G's approach is all about building value over time, which can lead to more stable and predictable returns for their investors.
And it seems to be working for them. Remember that insane return they got on their Burger King investment?
Yeah.
28 times their initial investment. What's even crazier is that they're already seeing similar success with Hunter Douglas, a company that most people wouldn't exactly associate with high growth potential.
It just shows you the power of efficiency and strategic management. They have this talent for finding companies that have solid fundamentals, but maybe they're not running as smoothly as they could be, or they haven't fully tapped into their potential. And then they come and streamline things, optimize costs, and boom, increase profitability.
They're like efficiency ninjas.
Yeah.
They slip in, make everything run like a well-oiled machine, and then they slip back out with a hefty profit.
Ah,
Okay, let's move on to our last story for today. This one brings us back to the political scene, but with a tech twist. It seems Elon Musk, never one to shy away from a headline, has decided to form a pro-Trump pack.
yeah, that definitely got people talking, especially since Musk hasn't always been the most vocal supporter of the Republican Party. He's kind of known for criticizing both sides.
Exactly. So what do you think is behind this move? Is it purely ideological, or is there some strategic business angle at play here?
It's hard to say for sure what's driving his political decisions, but it is interesting to note that a lot of Musk's companies, especially SpaceX and Tesla, rely heavily on government contracts and subsidies.
Ah, so by aligning himself with the potential next president, he could be trying to curry favor and secure some sweet deals for his businesses. It's all starting to feel a bit like a game of chess, isn't it?
It definitely has that strategic element to it. Every move is calculated, every alliance is carefully considered, and the stakes are incredibly high.
And in this game, information is power. The more you understand the motivations and strategies of the players involved, the better equipped you are to make smart decisions.
Absolutely. But let's not forget about the human element in all of this. Behind all the financial figures and political maneuvering, there are real people whose lives are being affected by these decisions.
That's a great point. It's easy to get caught up in the abstract world of finance and politics.
Yeah.
But at the end of the day, these decisions have very real consequences for individuals, for communities, for the whole planet even.
Like we talked about Bitcoin's potential as an inflation hedge, but what does that actually mean for everyday people who are struggling to keep up with the rising cost of living?
Right. Does Bitcoin really help the average person? Or is it just another tool for the wealthy to protect their assets? And as AI gets more and more sophisticated, how is that going to impact jobs and the future of work? These are some big questions we need to be thinking about.
Absolutely. And while we may not have all the answers, it's important to have these conversations. By shedding light on these complex issues, we can hopefully start to address them in a more informed and equitable way.
Well said. Okay, so we've covered a lot of ground today. We've explored the interconnected world of finance, politics, and technology. We've uncovered the strategies, the motivations, and the potential consequences of these powerful forces, but we're not quite done yet. We have one more fascinating story to dive into, and it's a reminder that even in the high-stakes world of investing, there's always room for a little bit of fun and surprise. So are you ready for this? This last article from Forbes, it's almost too good to be true. Remember 3G Capital? The Burger King billionaires? Well, guess what? They just turned down a crazy offer for their stake in a window covering company.
Window coverings. Are we talking about blinds and shades?
Yep, Hunter Douglas. They were offered something like 2 or 3 times their initial investment.
Wow, and they walked away. That's a pretty big statement.
It's like they're saying, we see something here that you don't. It's almost like they're betting on a secret revolution in the window treatment industry.
Maybe smart blinds are about to become the next big thing.
Who knows? Maybe they're onto something. But I think the takeaway here is that sometimes the best opportunities are hiding in plain sight. You got to look beyond the hype and focus on the fundamentals,
Exactly. It's not always about chasing the latest trend. Sometimes the most solid investments are in the things we take for granted.
like window coverings,
Uh-huh.
apparently. So as we wrap up this deep dive, I
Yeah.
think the biggest lesson we've learned is that there's always more to the story than meets the eye.
Absolutely. You can't just skim the headlines. You got to dig deeper. Ask questions. Connect the dots.
And don't be afraid to challenge conventional wisdom. Sometimes the best investments are the ones that nobody else sees coming.
That's what makes the market so exciting. It's constantly evolving. There are always new opportunities emerging and new challenges to overcome.
And remember, it's not just about the numbers. It's about understanding the forces that are shaping the world around us. The political landscape, the technological advancements, the social trends, everything is interconnected.
It's like a giant puzzle, and we're all trying to figure out how the pieces fit together.
Exactly. Well, folks, that's all the time we have for today. But the conversation doesn't end here. We'd love to hear your thoughts. What insights resonated with you? What industries or companies are you keeping an eye on? Join the discussion online, and let's keep exploring these fascinating topics together. Thanks for joining us on this deep dive into the world of high finance